Hello and welcome to Retire Rich, Tales of Financial Freedom podcast with your host, Marc Hernandez. I'm your producer, RJ Malik. And Marc, how you doing today?
I'm very well, RJ. It's good to see you.
It's good to see you, and I see you have a guest. So why don't you introduce her and take it away?
Oh, I'd love to. This is just, we like to have conversations with people from various parts of life because everybody has concerns about how to become financially successful. And today I have a retired educator, Socorro. And she was an educator here in Texas for many, many years. And I asked her to come in to have a discussion about what obstacles educators face and to become financially independent. So Socorro, welcome. Welcome.
Thank you. Hello, Marc. It's nice to be here. Thank you for the invitation.
Well, we're happy to have you. And the thing is, Socorro, I want you to just feel comfortable and be relaxed. And because I know you don't do this every day, but what we'd like to have a discussion is what obstacles do educators face that keeps them from being financially successful? So we can just, start a conversation on that. So what would you think some of these obstacles would be?
Being an educator for 30 years, I've started off, and at the beginning, I had personal reasons and some responsibilities that saving for the future was not a priority. I was young and looking, into the future, I have a lot of time. So that's one of the things that came into mind when you're asking that question as far as an obstacle. Financial investing for our future, putting some money aside, is not a priority because we do have other priorities. One of the things is our income, our salaries. Salaries are not adjusted annually accordingly to the cost of living. So therefore, we have to, our budget stays the same. Our expenses are the same. So we have to make accommodations. And unfortunately, one of the things that we sacrifice on is saving for the future.
Now, is that common among, when you started out? Did you find that was very common among educators that were approximately your age? Would you have conversations with them to see what they were doing? Because I know here in the state of Texas, our educators have a retirement plan that the districts, yourself, and the state contributes to that will help you in retirement. But before that happens, what was the general feeling of educators that were in your age bracket at that time when you were starting out?
Mainly, I think we kind of fed off of each other. Our colleagues would, when we did have some reps coming in as vendors for the district, they would come in annually and not really knowing much about it. We would kind of sit in and, within 5 or 10 minutes, we made a decision as far as what was what we would be investing our money in. And a lot of times there wasn't any kind of follow through, or it wasn't discussed or explained to us in detail. So we signed up for something and not really knowing if it was in the best interest for ourselves, for our individual needs, that we would, when we came time for our future, for our retirement, we were not sure that was, the best. Like I said, a lot of times these reps would come in and they'd sell us something and we'd walk away with a pamphlet in our hands and we'd go home and we put it away. We file it away. There was no follow up. The following year, somebody else would come in, another pitch, a sales pitch. So we would sign up for that. And pretty much what ended up happening is we had different companies that we would invest. And again, was it in our interest, if for our future, was it a good investment? We did not know. We were not sure.
In working with educators for over 40 years, we found that they are not properly helped. I remember one educator telling me years ago, Marc, somebody would come to the school and they would hand us a donut in one hand and a pen in the other and just tell us to sign up. They just said, hey, you need to do this. It's good for you. We find, or my experience has been that, the school districts, most of the educators are in, don't have a program to properly help their employees get sound financial advice. Like you said, they allow these vendors coming in, and most of the time, these vendors work for companies that don't offer a wide variety of products. Were you ever exposed to products that were allowed you to invest in the stock market or mutual funds, or did they allow you to do a Roth versions of, because most of the time what you're signing up for are tax sheltered annuities, or what we call our 403B, Section 403B of the Internal Revenue Code, which allows you to put money in pre-tax. But then also now there's that became very common in the past few years are Roth versions of the 403B. It allows you to take advantage of the of Roths. So do you feel that the school districts you worked in properly were there to support and properly help you to be educated financially?
I would not say that I felt comfortable with, when we were investing. We mentioned that these companies would come in, and we had about 15 minutes during our planning period to come in and sign up. And a lot of times it was just kind of by word of mouth. What were our colleagues signing up for? We did not really know whether it was a Roth IRA, or, we were investing in mutuals, bonds. We did not know. We just knew that we were investing, and my monthly deduction would be taken care of through payroll. And so, at that point, we felt good about it. I'm investing. If you were to ask me what my investment was in, I would not be able to tell you. We would get some, sometimes, quarterly statements and annual statements. We'd look at it. And if we had any question, I know I would basically look at how much do I have in this account. And, if I could go back to the previous statement, then I could say, okay, well, it's okay. It's doing okay. Not knowing that it could probably be doing better for me, or could it have, invest in something different? That was not available as an option for us. So, the unknown, but yet I felt like I was investing. So, I think that that could, we could have used more clarification.
Yeah. Our experience has been that, most school districts, in the past, it was like they would let anybody in and market their products. Now, a lot of school districts, they single out different products. A lot of them have what's called third-party administrators to handle all that for them, because it became a burden for the business offices to handle it. So they hired a third-party administrator, and the third-party administrator would vet usually the companies that were offered. And so I know that over the years that the product selection did expand. But when you were starting out, it was probably very limited in that regard. What other barriers do you feel that educators run into that keep them from being financially independent?
I think one of them, like I mentioned in the beginning, our salary, our income, we have priorities. We have our day-to-day living expenses. We have mortgages. We have a lot of times some of the educators may be single parents. So as far as having extra money to invest, it's not there. So we do start off with a minimum, not knowing that, how this is going to work for us in the future. And so, one of the things, like you did mention, the same people would not come back the following year. So there's no follow-up. If we wanted to call and ask, then we'd, more likely we'd get an answering machine. And so there was no a one-to-one conversation that we can go back and say, maybe I need to relook at this. And, so I could say that, and I agree that is one of a major obstacle, major problem, that we need more one-to-one conversations with these vendors, and know that we can call someone, and there's always someone on the other end to help us. So yes, We know it's a priority. We know we should be saving money. When we do sign up, we feel like, okay, this is it. We're doing good. Not knowing that we can, do better for our future. And again, we don't start thinking about, what are we saving? What do we have? What accounts we have until we get closer to retirement. Then, within 2 years or away from retirement, we start looking at what is it that we have? Is it going to be enough? So that's important.
Do you think it would have been helpful to have work with somebody? Like I said, you have these people coming into the school district to sell you a product. Okay. They're really not looking at your whole situation. And you mentioned a couple of times already that an issue is, might say, we'll use the term budgeting, for an educator to be able to find the funds to invest and to properly budget enough to reach your financial goals. So if you were able to work with an educator, let me take you back for maybe the first year or two that you started. If you knew a financial advisor or knew of the opportunity to work with a financial advisor that would sit down with you, go over all of these situations you talked about, and especially working maybe a budget to free up monies that you would be able to utilize and invest it properly. In other words, know what you're putting money in and how it could help you in the future. Because a lot of programs we see that were offered to educators were just fixed investments that paid 3-4% a year. And if they would have been in something that was invested in equities or bonds or some with a more upside potential, then that would help bridge the gap at retirement to where when they started receiving their pension, they would be in a much better cash flow situation. So do you feel that if you would have had the opportunity when you started to work with a financial advisor, do you feel you would have taken that opportunity?
Definitely. If I had had the opportunity to talk to someone, and I think a lot of, on my personal view is that maybe I was thinking that, I had to have a lot of money to be able to contact or have, someone, a financial advisor, not knowing that when we first start, we can't afford big deductions. So, it would have definitely been helpful to have a personal financial advisor to, guide me through my investment, which is something that is not available to us as educators, especially when we're first starting. It's all new to us, and it takes about, I would say, in my case, 5 years to kind of just know what's going on and not just signing up for everything. People would come, vendors would come, reps would come. We signed up for things. We, life insurance they offer us. We signed up for life insurance. We signed up for disabilities. We signed up for term lives. We signed up for things, and we're all over everywhere, all over the place. So that's something a financial advisor would definitely have been something that would have been of tremendous help in my situation. And I think in a lot of people, a lot of the educators, some kind of guidance, it would be definitely be of great help.
So you brought up something and I'm glad you brought up this point. We do see a lot of educators sign up for, as you said, a disability, usually short-term disability, which is very good. They get life insurance. Usually they get catastrophic health insurance, cancer policies, all these things. Let me ask you, over the time when you first got these programs to when you retired and when you leave, you basically lose these programs. So did you collect or did you file a claim on any of those programs during that period of time?
No, as I got closer to, I was an educator for 30 years. And as I got closer to retirement age, I started looking within the past year before, or 2 years before retiring, I started looking at what is it, all the deductions that I have? What are the insurances that I have? What are the policies that I have that I'll be able to carry with me after retirement? And I came to realize I was paying about $600 worth of different types of policies that some of them were not going to be able to carry with me, that I was not going to be able to carry with me.
Pardon me, $600 a month?
Yes.
Wow.
About $600. And now that I go back and think about it, I could have been investing that money into, a retirement plan that was going to be very profitable for me. Yes. And one of the advice that, one rep came in and when we were first starting, picking up insurances and all that, he says, "Oh, just sign up and start off with $50, and every year you increase the amount." And so we did. That was a sound advice at that time, and we would follow with that. So I knew that every year, yes, add me up with sign me up for another $100 deduction, another $100 deduction. But was that a good advice, good sound advice? I wouldn't say so.
Yeah. So you were signing up for these other variable programs like cancer, catastrophic, disability, those kind of things. Whereas one thing a conversation we have with clients that are starting their careers is understanding putting money away, especially through payroll deduction, which is fantastic. But it's basically dollar cost averaging. In other words, get into an investment. You're putting dollar cost averaging. You're putting a little bit every month. Sometimes you're buying a little high in the market, sometimes a little low, and also the time value of money. You mentioned, hey, I couldn't afford very much, but you're in your 20s. If you're putting away $25 a month, $50 a month, and in a good solid program, you've got plenty of time for it to compound and to grow. And as you said, as I got raises, made more money, I started buying more things, but maybe you weren't buying the right thing. So would you say that going back, you would have probably made better use of your money that instead of maybe purchasing some of the things you did, getting investing more towards your retirement? Would you say that's accurate?
I would say that would be very accurate. Again, getting some sound financial advisement would have been very, very profitable, very, very, something that would have worked for me.
Now, you mentioned these reps would come into the school district every year, and sometimes you said they were different. So you never felt that any of these people that were signing you up for these programs was your true financial advisor. You didn't think of them as a financial advisor.
No, not at all. No, it would be different reps, different companies offering the same thing. And so we had to decide. Sometimes at one point, I even dropped one policy to start up another policy because this one sounded better. So yes, again, not the best financial sound investments or advice.
So based on what we've talked about, is that would you say you would recommend for any educator starting out for somewhere along the pathway to their career, would you see the value in working with their own personal advisor to handle all of these issues and to help them plan more efficiently?
I would definitely say so. Again, even if it's, $25 a month, you start up an investment, you start off the deductions, and having someone that you can rely on and trust, and having someone that's going to be there when a phone call away, or, you can call them up and say, I need to meet, I need an explanation. Am I doing the right, am I on the right path for my future? So yes, definitely, having someone as a financial investor advising you how you are investing your money, I would highly recommend that. And even though we feel like we would have to make millions of dollars to have a financial advisor, and now I know that no, it's possible. Even with a small amount of money, it's always the best to have someone as there for you, working alongside with you and advising you in your financial investments.
These reps that would come to school, were they keeping up with you over the years? Would you see them regularly to update your accounts, to make sure that you're still on the correct path to financial independence?
I would not say that they would follow up. There was no follow-up communication at all. I mentioned that we would see them one year, and then the following year somebody else would come, and it could be a different company. So as follow-ups, no, there wasn't anything. The district has a place that you can go and ask for information, but a lot of times we would not make the time to go in, and we didn't feel that there was anyone there that we can make a call and get some advice if we had any questions.
Okay. So, I would clarify by saying that maybe the school district could be more helpful. Like I said, we visit our clients on an annual basis, sometimes every semi-annual, quarterly, depending on the kind of program they have. But the thing is that these people, when they came back to see you, it wasn't like they came with a plan, said, "Oh, Socorro, here's your account. This is what you have with us. This is how you're doing. This is what, we recommend you do," or those kind of, you didn't have those kind of conversations.
The type of conversations, again, within, 10, 15 minutes, because that was all that was allowed. You'd have a long line behind you. It was not on a personal basis. So the conversation was, we would get kind of a summary of what we had, our deductions were going towards. So we would get a rundown of what we had. But as far as details, exactly what my investment were in, no. It was very, not vague, but it was not clarified. There was no clarification.
Okay. So can you think of any other obstacles that an educator would have, based on your experience, runs into that's keeping them from being financially independent?
I think the seeking out advice, help, that could be an obstacle, because a lot of times, like I did mention, we feel that, my deduction, my payroll deduction or to what I'm investing is, it's a small amount. So we could be misled on that we feel like, okay, there's other people making more higher deductions and all. So as far as an obstacle, one of the things that I would say is, we know we have, we should save, we should plan for our future, we should be investing, but other priorities come into hand, and that we set this on the side burner as far as investing. So even though if it's only, a small amount of money that we're investing on a monthly basis, that is something we need to get started. I remember my mom always saying, save your money. She would say in Spanish, ahorren su dinero. And so we were too young. And that's one of the things that, happens. We feel we're young. We have a long time to go before, we reach retirement age. So tomorrow we will start saving.
In concluding our conversation, Socorro, what advice would you give? And I'm going to start a little bit different. What advice would you give an educator who's maybe within 2 to 5 years of retirement? Since you went through this process, what advice would you give them regarding financial matters?
I've given this a lot of thought, because I do have some colleagues that we retired, and I have some that are getting ready to retire. And I've thought about this, and I said, they need to seek out some advice from a financial advisor. Find out at this point where you're at. Are you investing your money in the right place? Make contact with someone. It's very important. Don't wait. Don't wait till it's too late. So now is the time to start. It's never too late.
And what advice would you have with somebody just starting their career as an educator?
Even if it's a small amount, monthly deduction that you can put aside and put it in the right investment plan, that is, in the long run, it'll pay off. Start now, start small, and before you realize it, that amount of money will grow for you.
Socorro, I want to thank you for your insight and for your time. I'm hoping that some of our conversation today will help somebody make the right choices and lead them on the right path to financial independence. Thank you very much for your time today.
Thank you, Mark. Thank you very much.
All right, Mark, before you go, can you remind people where they can find you?
Well, you can call our office at area code 956-994-0407, or you can email us at www.mahfinancial.biz, B-I-Z. So got the logo on the shirt today, mahfinancial.biz.
Excellent. Okay. Looking forward to your next podcast, and thank you for listening to today's Retire Rich Tales of Financial Freedom podcast. Please like, follow, and share this podcast with friends and family. Until next time, for Mark, I'm R.J. Malik.
Thank you for listening to Retire Rich Tales of Financial Freedom. Have questions about topics covered during the show? Visit our website at www.mahfinancial.biz or give us a call at 956-994-0407. Don't forget to click the follow button to be notified when new episodes become available. Investment advisory services and financial planning services are offered through Simplicity Wealth, LLC, an SEC-registered investment advisor. SEC registration does not constitute an endorsement of the firm, nor does it indicate that the advisor has attained a particular level of skill or ability. Insurance, consulting, and education services offered through M.A.H. Financial. M.A.H. Financial is an unaffiliated entity from Simplicity Wealth. Clicking the like button does not constitute a testimonial for or an endorsement of our investment advisory firm, any associated person, or our services. Clicking the like button is merely a mechanism to circulate our page. Like is not meant in the traditional sense. In addition, postings to our page must refrain from recommending us or providing testimonials for our investment advisory firm. Because the SEC and state securities regulators generally prohibit testimonials, any such postings are subject to swift removal.
The views expressed herein reflect the views of Marc Hernandez and Carlos Lopez as of the date referenced. These views may change as conditions change. The views expressed herein are not intended and should not be construed as investment advice, and they do not address any individual's specific situation.